Hello folks, welcome to Pro Trader Strategies Market Commentary for Wednesday, April the 21st. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environment, how those two come in to impact the markets with some of my market analysis. I do the same thing in these daily market commentaries, but I take it a little bit further and talk about my option strategies I'm implementing based on those assumptions I come up with in my market analysis. For you folks, I've streamlined that process for you guys to find the best strategy for any given assumption. What we do is we look at the pricing of the options and determine whether they're cheap or expensive. That leads us down the path to finding the right option strategy. I show you how to do that quickly in these webinars, so please check those out at protraderstrategies.com. Without further ado, let's get on with the economic data. Across the pond, we got consumer price index out of Great Britain coming in at 0.7%, a little bit lower than the expected 0.8%. So consumer price index coming off a little bit opposite of what we were seeing here in the United States, where it was coming in a little bit hotter than expected, because we've been seeing these PPI numbers, which is the producers index, on their pricing rise a little bit due to some of these external inputs being gasoline. Lumber surely has to be affecting these guys, and copper. Anything going into building a home for the most part is driving prices higher, but those same products go into other aspects of the manufacturing process as well. That's going to drive prices higher. Can they pass that off to the consumer? Well, we're not seeing that from Great Britain, because when we look at the producer price index, the inputs coming in at 1.3%, expected to be 0.5%, so much higher than expected. The producer price output is only 0.5%, so they're not able to offset those higher prices coming into the manufacturing off to the consumer. So that is going to eat into some of the margins of these companies if we continue to see that. Inflation starts happening when they can offset it to the consumer. All right, and finally, let's moving back here to the United States. We got our crude oil inventories coming in at a build of 600,000, expected to be a drawdown of 3.7 million barrels, or 3,700,000 barrels. This came in as a build, much higher than expected there. We've been seeing drawdowns here as demand has continued to increase. Here we're seeing a bit of a blip here with this crude oil inventories popping a little bit here. So it's something to keep an eye on going forward, because we're getting some mixed signals out of the economic data here in the United States and across the pond. Now, we need to see a bit of a global recovery here, folks, before we can really see the entire economy start taking off. We can't just have it isolated to the United States. We need to see more consumption going on around the United States here in order to really feel like we're coming out of this. All right, so let's talk about the markets. We've got crude oil coming off a little bit here, $62 a barrel, just toggling right on that 50-day simple moving average, which lines up with our 76 Fibonacci here. Now, as of right now, we are just slightly above this line in the sand, but a settlement below that would lead us to believe that we are starting to roll over and that the bears are starting to win in this battle of crude oil. Now, Bitcoin, I wanted to throw this up here because we've got some bottoming patterns going on here, and any settlement above 56,250, 56,250, kind of just drawing that out there, is something that is going to remain bullish here, because we have all of these little candles setting up here. That is still a bottoming pattern. We haven't gotten confirmation of it at this point, but what we are seeing here is that we've got three dojis in a row that are very similar. You know, one is green, but we have our trend line going like this, and we have the candles kind of, you know, just rolling on this bottom line here, and this is more or less a bottoming pattern, because we have all of these same candles still settling above that trend line there. So that is usually a reversal there, because this is a real battle of the bulls and the bears. We're staying above this 50-day simple moving average. I'm believing Bitcoin is going to start rebounding here and moving higher. If we settle above 56,250 is about where I'm looking for that candle to make it look like we've got three hangman dojis right there at the bottom there. All right, gold futures moving higher here, up $14. We finally got above this little trend line that I have where we kind of found some support areas in and around these Fibonacci's. These Fibonacci's go way back, so we are looking at those. This is basically the 2009 highs, I believe, somewhere right around there. Might have even written it in there. Hopefully it'll pop up, but it's not going to. So we got above that little area there. That is bullish. Now we are looking to test that 1800 handle and maybe even push a little bit higher into the mid 1800s here as we're seeing the dollar weaken. That's part of this catalyst to drive this gold higher. Is when we see this weakening dollar, we should see some of these dollar denominated assets moving higher. Now the build in crude oil is driving crude oil prices down more so than being offset by this weakening dollar there. So keep that in mind as well. All right, bonds can't get above the 50-day simple moving average. Bumped up against it again today and started losing momentum as we speak here. But that 50-day simple moving average really acting as some resistance here. Now, VIX, we were thinking, or at least I was thinking, 20s was going to be something around the corner because yesterday it was feeling very heavy in the equities, and I was expecting to see some more follow through here throughout the day. But we're seeing the Dow Jones finally claw its way back into positive territory, up 150 points on the day. A lot of this is being led by IBM, which we'll talk about here in a minute, but IBM making a big move to the upside as well. NASDAQ finally back in positive territory. We were staring at negative off the open here, and E-mini S&Ps back into positive territory. So yesterday looked like confirmation of a rollover here in the equities. Today, not getting any follow through on that downside momentum. So are we continuing on this bullish pattern? Well, we haven't broken through those 50-day simple moving averages. That's going to be your first clue as the market's starting to want to correct there. So we're going to keep our eyes out for that for a bearish move. Having said that, yesterday after the daily market commentary, I went on a cleansing of my portfolio and basically got out of most of my positions, IBM being one of them. Now, we talked about the long put spread after their earnings that popped higher. I got out of that. I talked about that in the daily market commentary. At that point in time, I was still long IBM in my portfolio. Now, if you guys remember, I got clipped on my IBM selling puts during the earnings. Market came down. I've lowered my overall cost basis on this trade by about $5, $6 maybe. And I got long at 120, but lowered the overall cost basis by doing covered calls, selling some puts, cash secured puts, doing dollar cost averaging, all of those things settled out of the money. All of my option strategies settled out of the money, allowing me to lower that overall cost basis quite dramatically by about a little better than $5. Yesterday, we started getting a bit of a topping pattern, so here's where I got long at 120. And then, selling, did some covered calls throughout this entire time there. And with that said, yesterday with the topping pattern that we were getting there, I don't know why, there we go. So this was looking like a topping pattern yesterday there. Not confirmed, obviously, but I didn't wait for that. I got out of my long IBM that I was long at 120. Like I said, covered calls, all of that stuff we talked about until I'm blue in the face in these webinars and in the daily market commentaries, how I've talked about this cost basis lowering. Well, I've used this as an example in those webinars as well. But having said that, got long at 120, lowered the overall cost basis, got out yesterday 138.16. So out of that trade, yes, I could have done better today with a nice move to the upside, but I was expecting a little bit of rollover, maybe cover the gap, something along those lines. Not really looking for it to push to the upside. But having said that, I'm going to stay playing this game, and I'm going to be looking to do some cash secured puts here in IBM as well, if we get any kind of pullback. All right, and then we want to look at Schlumberger, because I got out of this trade as well. SLB. Now, if you guys remember in SLB, played this, was wanting to go for the trade in here, and yesterday it was just the market was just relentless, and I was looking at anything that didn't stay above this little line in the sand, kind of right there. That was a terrible line. Maybe I should draw a straight line there. So basically just slightly above that. We broke below that yesterday. I decided to pull the ripcord on it. If you guys remember, I had on the June and created a synthetic long position in this trade here because still had pretty decent options, and went in there and did the June, bought the 25 calls in there, sold the 25 puts. That creates that synthetic long, all right, 100 deltas long, and I did it for $1.75 debit, all right. Now that means that my break even on this trade is $26.75. Obviously, the market has broken down below that. I got out of these for a 17-cent credit. Now, that means I got out right around 25.17 or something, slightly lower than we are here. But with that breakdown yesterday, pulled the ripcord on it. I'm out of Schlumberger. And then we also did, or I did, I got out of my PENN, folks. Finally dumped this one, got out for $89 and some odd cents on this trade. So got long at $4.49. If you remember, lowered the overall cost basis to a negative $1.50, meaning doing covered calls, cash secured puts. Lowered the overall cost basis on this to a negative. All right. So with that said, got out at that $88 and some odd cents. I can't remember right offhand. Let me just double check this just to see if I can. PENN got out for, $87.16. So much lower than where we are right now. All right. And then finally, no, we're not finally yet. And then out of my IRA, if you guys remember, I just did this trade as a little bit of a play here. And we went in, or I did VMNT, and bought them for 19 cents. Got out of them for $1.06 yesterday. So a nice little win there on VMNT. It was one of those pink sheet stocks that I was adding to my portfolio. I did that around the same time that I did the, added a couple of other ones. This was done on last year, 8/20, so in August of last year, last summer. Played this, bought it for 19 cents, got out today. I just decided to cover a lot of these. If we were going to have a big correction, a lot of these things were going to fall flat. Intel, if you guys remember, I had on a long strategy in here for the play to the upside, obviously breaking down below the 50-day simple moving average yesterday. That was really where I was talking about that I was going to be looking to cover this trade here. And if you guys remember, I had on the June, and I was long the 72.5 calls, short the 62.5 calls for that long call spread, for that call spread there. And I was short the 72.5 calls, long the 62.5 calls. And I had originally done that for a debit of $3.24, and I covered those for $2.56 today. And that's it. I think I've covered everything. Got out of Schlumberger after the daily market commentary. IBM trade, the long trade. PENN, got out of that. Out of my Intel call spread, and out of VMNT. Those things I didn't cover. I did cover the Gumble yesterday. I'm pretty sure of that. But just to make sure everybody's clear, I did cover my Gumble as well at $10.60. All right, that's it. That's all I've done. Please take a moment to go over the disclaimer, as all of these trades I'm talking about are not solicitations for you guys to implement into your portfolio. What we're using these as learning examples, so that when you find a directional assumption that follows my guidelines for implementing an option strategy, that is going to be the one that has the highest probability of success. So please check that out at Pro Trader Strategies. And if you can't take that, take it easy.